Good morning, everyone, and welcome to the European crossover webinar. And sorry about the delay in startup. Bear with me. So we have seen a pretty good sell-off here in the SPOOs, and actually a decent little recovery. I posted in the chat room that we had support on a daily coming in here at 28.29. Actually, also on the 2-hour chart, I actually posted that. I think I posted that chart too, or posted that level that also came in at 28. You can see right here, 28.23. I know I posted the daily on there. We grabbed a little bit, but obviously we had a pretty good slide yesterday, and I was up actually working out pretty late, so I kind of slipped in just a bit. But anyway, I wanted to go in detail, but anyway, we'll get to this. So yesterday we did go on and slide back, and I was pretty upset with myself. I lost track of time and didn't even realize. I thought we still had an hour and 15 minutes to go, and it turns out it was in the last 15 minutes, and came in and tried to pick up as we were sliding back. Now, the loss wasn't bad at all, but because I had gains during the day, but I was pretty upset with myself because I had simply just, for whatever reason, I just felt that we weren't going to do very much for the day and kind of lost track. And somehow, I don't even know, if it wasn't for the guy in the squawk saying, I think he said something like, there's 10 minutes to go in the day or 15 minutes or something like that, that I didn't even think about the time. I just thought, okay, it's come down, I'll go and step in. And for that reason, I was pretty upset with myself, and also for not factoring in some what-if scenarios. One of the things I was looking at yesterday, and the daily at the time we were up in here, and I'm thinking, hey, you know what? We're going to close right in here, and this is not a bad area to be just short, and even if you have to hold it, and that's when it quickly started to slide back. So I was kind of just letting it go, no big deal, and did back. We kind of sat back, and as we broke 2,900, that's when I saw, 28.94. I thought, you know what, 28.84, seeing right here, and so I was really upset with myself for not staying on key with things. So anyway, that being said, we have come down here to this 28.29. We've seen a pretty nice bounce back up in here. If you look at it here on the 2-hour chart, you can see here almost up to this 28.66. And certainly here in the NASDAQ, we saw a pretty good fall here too. And we'll take a quick look at the Russell. Same thing, a pretty good decent pair back in here, came into some support here at 1250. Same thing right here, saw a pretty nice bounce back. You can see that coming in right there, tagging that 1250 and jumping back. You can see it probably a little more clearly here on the 30-minute. We look at the big loss, but you can see a pretty good little pullback, just below that 1250, a nice bounce back. And if you can see here, we came in right here into our a little bit slower EMA here. On the 30 minutes, you can see the market rotate a little bit lower. And the YM. With that, let's go on and take a look at the news. Or not news, but the economic calendar. So we did have UK data out earlier, including GDP, and we take a look at the cable. That market has actually been trading in a fairly tight range this morning, but we'll be looking at some of the analysis because we had closed below that key level that we mentioned on the previous day in the analysis, and that really opens the door. I believe it opens the door for 2171, but we'll see the notes on that. And once again, going into the UK data, we also had industrial output and manufacturing output, all pretty good falls, certainly to be expected in light of what's going on with the virus. As we come in later today, we do have industrial production, European industrial production at the top of the hour. And then coming into the States, we're going to have PPI, but that's going to be final demand here. And that'll be it for data coming into the States. Had a pretty good little bounce back too, and you can see it from 60, taking that dip to 28.48. And coming in, actually holding here at the VWAP. And let's go on and move into the news. So the dollar eases from a 3-week highs ahead of this Fed speech. The dollar held below a 3-week high on Wednesday ahead of a speech by Federal Reserve Chairman Jerome Powell on growing speculation that the United States could introduce negative rates. Though some of the U.S. policymakers have spoken against negative interest rates recently, 2-year yields fell to a record low, and Fed fund futures also skirting negative territory. Trump on Tuesday against the push to adopt negative interest rates, as data showed the U.S. consumer prices dropped 0.8 in April, the biggest decline since the Great Recession, fueling debate over more policy responses. If push comes to shove, the Fed would, of course, consider negative interest rates too, but they are likely to be on the bottom of the Fed's list of possible options when it comes to supporting the financial system or the economy further, said Commerce Bank strategist. Against a basket of rivals, the dollar index edged 0.1% lower to 99.98, hovering below the 3-week high of par 44 hit on Tuesday. The greenback has gained more than 5% from an early March low of 94.63, while the dollar has benefited from recent safe haven flows amid the market turmoil. The outlook remains divided, with hedge funds holding their short bets on the currency, while institutional investors remain bullish. Powell will also be speaking on current economic issues on a webcast hosted by the Peterson Institute for International Economics at 9 a.m. Until now, Fed officials have said they do not see a need to cut interest rates below zero, and some market players expect Powell to stick to the script. But what's worrying is what Trump is now talking about. Looking at past examples, the Fed has eventually done what Trump wanted to quite often, said Hirohiko Ueno, senior strategist at Sumitomo. Elsewhere, the New Zealand dollar slumped 1/10 to 60.14 against the US dollar after the central bank expanded asset purchases, and the British pound firmed to 22.88 as bond yields fell after data showed that Britain's economy contracted by a record 5.8% in March, even though consumption dropped less than feared by some market participants. And we'll get into the analysis. So the euro moved higher on Tuesday, rallying to 8.86 before closing under 8.50. Resistance on Wednesday will be 8.93, with a close above, placing that in a short-term bottom. Support will be 8.07. So once again, if you look here, we're trading an exceptionally tight trading day. We did go on and pop up here. I think we had resistance at 8.72, and we got up as high as 8.86 before closing just under 8.50. But you can see we're keeping it in a pretty tight range here, boy, about as tight as I've ever seen that. So once again, resistance is going to be 8.93. And support will be 8.07. Moving on to the cable. So cable slumped on Tuesday, closing on its lows at 22.45. The daily close below 22.85 now challenges 21.22 with initial support at 22.17. But boy, we're trading, look at that. Tight as a drum. Holy smokes. So 22.17. Lower, it's going to be an open challenge, or opens the door to challenge 21.22, but 22.17 is still going to hold here. The only difference is on the upside, 23.33. And for the June 2021, that's 2021, the price is in negative rates. That's for the Bank of England. June 2021, the market's priced in negative rates. It came over the squawk. So let's go and move into the Aussie dollar. So the Aussie posted a lower close in a very tight range amid the sell-off in equities. Support will now be the 63.97 you can see down here. But what's going to trade in a really tight range? These FX markets are really quieted down. 63.97 with resistance at 65.30. You see that's coming in. This was, and this was even this area was relatively tight. So it's almost going to reference this as a small-legged doji. There's no sense as a small-legged doji. But God, look how tight we are today. We're just not even moving. Let's go on and get onto the Kiwi. And the Kiwi has now, after we dipped lower yesterday, now we're starting to make a run down here. And support's going to come in right into these lows there. We're just actually just about there. There'll be support there, which is going to be 59.90. That's been a support level in the past before. 59.90, and the lows aren't that far away from that, but it's going to be 59.90. And resistance. Hearing something like a phone ring or a phone thing. I'm not sure. Thought it was a squawk person, but anyway, with resistance is going to come in 60.55. And just bear with me. Okay. Stop, but it sounded like a phone ring or a phone that gone busy, so it's kind of nutty. But anyway, it's just stopped. But anyway, let's go and move on to the dollar CAD. So the dollar CAD added on to gains on Tuesday with the sell-off in U.S. equities. Resistance on Wednesday will be 41.50. Well, it looked like we were going to take off, and holy smokes, man! Just like the rest of the other FX, we are just simply dead in the water. What the heck? Let's see here. Oh, we are right there. No, we're just dead in the water. Hang on. Hard to believe how dead it is. Anyway, resistance on Wednesday would be 41.50. We supported 39.91, and boy, we are just, look at that. I cannot believe how quiet it is. and support 39.91. Moving on to the peso. So the dollar peso extended its gains, taking out bias chart resistance. Bias chart resistance will now be the prior level of 24.62. That's a big pink level that's been in place for a while. With support at 23.86. Let's go move into the dollar yen. The dollar yen gave back on Tuesday in light of the equity sell-off, but not close to the same magnitude as the sell-off we saw in equities. Resistance will be 762 with support at 661. So we are allowing for this to pull back further. So resistance is going to be 762. With support at 661. And on to the cash dollar index. The dollar index paired back amidst the equity pullback, but remained to stay above par. Support on Wednesday is going to be 99.52 with resistance at par 35. And boy, all these FX markets are dead. They're also all mirroring each other with these real tight ranges and right in the dead center of these tight ranges. So resistance is going to be par 35. And support 99.52. Norway's Olsen says he does not foresee any further rate cuts coming out of the squawk. So if anyone's trading the Noki, Norway's Olsen does not see any further cuts. And that's going to do it here for the majors. Let's go and take a look at the cross rates. So we've seen, we saw that dip yesterday, and we've seen it even, take a little bit stronger move here. I guess we're starting to see this, unlike the other pairs, we've seen this with the yen pairs. But we certainly saw that pullback, and we're really into what would be considered right in here support. All right, there with this low here. Close. Right there, 64. 64.07. 64.07 is going to be support. And resistance, right there, you can see that. 65.15 for resistance, and may have a tough time to try to get close, anywhere close to that. Now let's go and move into the euro yen. After 3 strong days here, we saw the market really finish towards the lower portion of its range here, and although it's a tight day, we have managed to at least wider range than some of these other FX pairs. But let's go and take a look here on the 2-hour to get a better idea of where support may be. We've come in just about the 38%, push it a little bit further to right there at that level, which is going to be 1583. 1583. And I'm going to go right there with resistance, which is going to be 1632. We'll move into the euro odd. Remember, we've been hugging the lows down here. We are starting to work up a little bit higher, just gently. And I think the resistance is going to really stay the same if we do get that bounce back. Which we had 67, 67. Oh, we did make it up here to 68.18. Right there is going to be resistance there. 68.56. We're still a long ways from that. I'm surprised we haven't been able to scoot up a little bit higher. Just go with this high right there, which I'll call it 68.60. And looking for support. And they tried to push hard, just not able to do anything. Support going to come in right there. 66.72. And on to the Euro Kiwi. But with the Kiwi sell-off, obviously we were able to extend those gains. Not that we're going to hit it today, but resistance we have to look at is going to be right there, 81.12. That'll be resistance going forward, but that'll be the key area. We could see this kind of language and then shoot it real quick, and that's going to be the area. I'm going to do some sellers. Looking at support, we'll have to go and look at the 2-hour chart and see if we can get it closer to. That should be support there. We're going to allow for a little bit better pullback just in case, which is going to be 79.27. And let's go move into the ASEAN. Just a little bit of a pair back, but we're holding up relatively well. We've come into what would be support right there. Just a hair low, which is going to be 69.02. Oh, there we are. Just moved up 1 pip. And resistance, well, that's pretty clear right there. It's at close, which is going to be 69.84. And from here, we'll move on to the guppy. Still hugging up against these lows here. I still think, I mean, there's still the possibility we can push a little bit lower here. Let's see if they can make a tag down here just to those tag of this high as support. The highs back here to come into support, which would be 31.15. And support It's going to be 3166 for resistance. And lastly, with the sterling node, actually right into support right here, right in this area right here. Right there, which is going to be 88.91. And resistance, that's pretty clear with this level right there, which is going to be 90.62. And looking at this, it's actually now, if we get this foothold here and just stay here, we have to turn this thing to bearish. One more day, we'll see if we can retain this. But we've been below that, but you can see here overall, it's still bullish, but we're actually getting to a point now where we have to go on. It's not a neutral, so we have to flip it to bearish. We'll give it another day before we make that move. That will cover all of FX. We can go in and take a look real quick on the equities. And also here with crude oil, still holding up relatively well. We kind of jumped around yesterday. I think some people got stopped out on this move just above 26. I forgot what the fib was, but it was 26.13. And we came up in here and then we paired back. But anyway, nonetheless, it's still holding up relatively well. And look here with this boost, you can see this upper area here, this zone, that capped it right here, this 28.66. That actually also think coincided with a 38%. Bear with me. Let's see if that was there. Yeah, a little bit higher would be 38% coming in here, 28.72. The zone here, and this is pretty good little slide here. They may have to fill in some pockets on the way back, potentially. There we go, up in here, up to 28.80. And looking at the NASDAQ, obviously coming here around this 91.45. And we're going to take a quick look at the Dow and the Russell. As I mentioned, we came down here, there's 1250 on the daily, but you can see it's a little bit further lower here when you look at now on the, wasn't too much further low here on the 2 hour. But that did provide some nice support, that 1250, so a decent little bounce. And taking a look here with the Dow, I'll have to get ready for the New York session ahead. And the area to look forward here. A bounce back right into this area here, which would come in right there. Actually, we did make that bounce there. Look at that at 23,703. We paired back. We'll have to get all the analysis ready ahead of the New York session. But that'll cover it for us. Thanks for joining us here on the European crossover webinar, and I'll get the bias chart posted, and we'll see you in the chat room. Good luck trading.